So for someone who wants to start their wealth creation journey now, today, in this extremely volatile environment, where on one hand you have an AI boom and on the other hand you have a job crisis globally and in India, what's the best way to approach the markets now?
No, so basically, I think, like I said, we are still a sunrise country. I would say that a lot of things are happening here, proactive reforms. We are after a very long, actually for the first time, probably after independence, we are seeing broad basing of the economy. So today, what you see is that across sectors, we are seeing multiplication of growth. You've been in the markets for a very, very long time. Way back in 2004, 5, 6, 7. It was all about infrastructure companies. It was all about power. It was all about FMCGs or banks. That's it. If you want to invest money in the markets, these are the 4 sectors which are available. And then we went through a very bad phase between 2008 and 14 after Lehman crisis. It was all about defensive plays, pharma, consumer, that 2 staples, and some few large banks. If you're there in that space, you make money. But today, you have broad basing of the opportunities available in the market, right? You have a power sector, which was a very bad sector, today is doing very well. Within that, you are seeing, new technologies coming in, and, we are pushing more for renewable power than thermal power, right? So that's a new opportunity which is coming up. The Make in India theme, backed by production-linked incentive, is given thrust to new sectors, new opportunities like electronic manufacturing services. And then you have so many companies which are doing so well. Cables, wires, selectively defense. So manufacturing is a big piece, I would say. Then thanks to the rising per capita backed by lower taxes, lower indirect taxes, is basically creating a discretionary consumption boom. So now you have, you can buy a company which is into malls where there is high-end discretionary consumption, luxury real estate, jewelries, girls will like, hotels, airlines. All of these are where India is spending. I mean, you travel anywhere, the flights are always sold out, right? If you see the next 3 months, I travel a lot. So the fares, let's say for Delhi, on an average, I used to buy for 5,000-6,000 bucks one way. 5 years back, today it is 8,000-9,000. Room rates used to be 7,000-8,000 average room rate. Today it is 17,000-18,000, right? So the discretionary consumption has become big. And then in the tech space also, between 2000 and 2020 or 23 or 24, for 24-25 years, tech was all about software businesses. It was all about Infosys, TCS, Wipro, coding. We used to talk about coding from Boston to Bangalore, right? But next 25 years is not about coding and all that stuff. Next 25 years is all about cloud computing, IoT, AI, digital businesses. So US have their FANG companies. We will have our own FANG companies, right? We have a couple of them are listed and still getting listed. We have one digital IPO which is going on today, right? So that's a new opportunity for next. So the point I'm trying to make is the growth is very broad based. You have multiple opportunities, multiple sectors, multiple themes, sub themes, and with the kind of new businesses which are coming into capital markets to raise money rather than going into banks to raise debt, it creates furthermore broad basing of the market. So now in this kind of a situation, I think today's generation, my son, he's 21, going to be 22. And when I talk to him, I just tell him, boss, you are at the right place at the right time for the right compounding, because next 25 years, I feel for India will be great story. I mean, in front of your eyes, you will see your economy touching $30 trillion by 2050. And if you take market cap to GDP as 100% only, today we are 125%. Then our market cap after 25 years should be 40 trillion or 45 trillion. And
is there anything that could come in the way of this compounding
Many
journey?
things will come. It's not going to be like a fixed deposit journey. It's not going to be secular. It's not going to be linear. You will have your ups and downs. We are in downs. We are in a bull market, but bull market comes with its own small phases of patchy phases, where growth slows down. So if you take big picture, looks good. But in 25 years, we'll see everything. I don't know if, we suddenly from out of the blue, you got COVID. I don't know, something like that happens. Where we are in terms of, let's say, US macro, something goes wrong there because of the very high debt, or I don't know what they're talking about. They want to depreciate their dollar. They want to see big picture. If you look at the whole petrodollar concept also is coming to question mark, because now we are buying oil from Russia in the local currency. We're no longer buying in dollars, right? If that's everybody starts to do all that stuff, and then with the popularization of EVs and all of those things, the dependency on oil comes down. So macro concerns, global macro concerns will be there. Political uncertainty is always there. See, today we are in India, third term stable government, right? Largely non-coalition government. So you can take proactive reforms. So how is the political landscape shaping up? Because to a very large extent, governments decide where the country will head, right? The governments will decide whether the country should go in the growth phase or they should go in the socialist phase or those kind of things. So political uncertainty, I would say, global macros impacting maybe Indian macros. So there'll be bouts of underperformance. There'll be bouts of negativity. There'll be bouts of drawdowns, but stay put.